Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. We've also recently launched the Into the Cryptoverse newsletter. You can find a link to that in the description below or in the pinned comment. We'll select one person at random every single month to receive a 1 month free subscription to Into the Cryptoverse Premium. So if you want to get access to that, the newsletter, make sure you find the link in the description below or the pinned comment. And again, we'll pick someone random every single month to receive ITC Premium for free for that month. Let's go ahead and jump in. So, it's been a while since I provided an update to the bull market support band, mainly because it just becomes really irrelevant in a bear market when we're not even remotely close to it or even close to testing it. And the last time we actually tested it to any significant level was back in March and April. So I mean, you'd have to really go back like 6 or 7 months before we actually had a test of it. I guess about 6 months or so, but we're not even at it at this point. So I mean, who knows how long it'll take us to get there. But it's interesting because to some degree, at this point, it's been so long since we even saw the bull market support band anywhere close to us, or again as the bear market resistance band. It almost feels like maybe an old friend from high school you haven't seen in a long time, and it's almost weird even to even broach the conversation again. But here we are, and Bitcoin is sort of trying to get back up to it. If you're curious where it currently stands, it currently ranges from around 24K to 25.7. I mean, specifically 24.155 up to 25,745. So more or less it ranges from like, let's say 24K to 26K. It has been dropping quickly. I mean, to give you some perspective, when we were above it in March, the 20-week SMA was at like $44,000. The 20-week SMA has dropped by 20 grand or so since the last time we actually tested it. To give you some perspective on how far it has dropped. When I think about earlier this year, and we talked about in Q1, we talked about how cash is king this year, and how really this bull market support band just becomes a bear market resistance band, and it can stay that way for the better part of a year. It almost feels like a different life at this point. It was so long ago when we were back up in this range, but we are coming back up to test it. Potentially in the not so distant future. Again, it's only a couple $1,000s or so above where we currently are. I mean, if Bitcoin were to rally another 8% or so, we'd be at the 20-week SMA. Now, remember, it's important that whenever we get through it, or whenever we get to it, we'd actually like to not only break above it, but to see follow through above it, and then to eventually come back down and retest it. Remember, once we reach once we reach a point where we're above it, we always remember we have to go back and test it as support. For instance, if you think back over here when we tested as support, we did not hold it, and then that was it. It was a fairly lackluster mini bull market that happened in 2019. But over here, when we got back above it, you can see we really tested it for a while. But really, we came up, we saw the follow through of it, we came back down, we tested it as support, and then we were off to the races, and we shot up to new all-time highs. So that is an important nuance to this, and this is going to take a while to play out, more than likely, for us to actually get back above it, hold it as support. And also, if you go back to the prior bear market, when we got down here, we actually first got rejected by it, or even got rejected by it right here as well. So, and there's no guarantee we don't just get simply rejected by it again and go put in a lower low. You can go back to that first cycle and see that the first real attempt, we got above it. It did not hold. The second one, we sort of came back up to it and sort of two little bounces here and ultimately got rejected. And then the third one, we also got rejected, but it was sort of the beginning of the accumulation phase. Where we are right now, we got back above it over here. Maybe we're sort of repeating that pattern. If we get rejected by it and we put in a lower low, then I would argue that the likelihood of us breaking it on the next attempt would go up astronomically. Of course, there are no guarantees, and this is just based on what history shows us during a period of quantitative easing, right? A decade of quantitative easing. But the other thing I at least would argue, or at least mention, even though it's not something you should take to the bank by any stretch of the imagination, it's the idea, and I'll provide a counterpoint to this example as well, but it's the general idea. and I've said this before, if you think back to early this year, and we talked about our date with destiny, we talked about our date with destiny, the 200-week SMA. I said usually it takes until the 20-week SMA is below the fair value logarithmic regression trend line before we have a realistic chance to get back above the bull market support band and hold it. So you can see that we didn't really get back above it and hold it until after the fair value was above the 20-week SMA. It happened again here in 2015 as well. Like we had to see the bull market support band go below the fair value fit to a quote unquote non-bubble data for us to have a realistic chance to get back above it. You also saw that over here as well, right? I mean, we had to go below it. We even went below it here. It wasn't a sustained bull market, but once we went below it, we were able to sort of pop our head back above this lower regression band. And if you zoom into where we currently are, well, wouldn't you know it, the 20-week SMA has now recently crossed below the fair value. So there is at least a chance here, a somewhat realistic chance that we could go through it, right? I mean, as crazy as that sounds, right? Like as unlikely as it may seem, there is a chance that we actually break through it on this attempt. Now, if you want to measure, say, percentage down from the all-time high, we know we're not nearly as we're not as far down as we have seen in prior bear markets. So there's something, you need to keep that in mind. And then the other caveat to this is that the regression band changes every market cycle, theoretically. I mean, I think it should be refit every cycle. And the reason is because if you only fit it to, say, the data right here and right here, then you would have had a regression band that was a lot more optimistic. But that every cycle, if you refit it, it sort of converges to ultimately where the true value that it should ultimately be. So the counterpoint is that, I didn't have a regression band for Bitcoin back over here, but if I had one, we would have probably already been in it at like this range over here. And it was only until hindsight that we can retroactively fit it and say, well, we didn't actually get down to it over here. So assuming that's the case, I mean, I've been pretty transparent about this all along. I even said it in 2019 that we will have to refit the lower regression band when we get through the next bear market, of the next cycle. Once this is refit, it's likely going to just shift it down very, very slightly. Okay, but it could shift it down enough to where it hasn't crossed yet, is my point, right? Where it hasn't crossed yet. So I do think that's an important caveat to consider. It doesn't mean we can't break above it by any stretch of the imagination. A lot of this is going to be dependent on a lot of macro factors that, of course, we have no control over. We have inflation data coming out really, really soon. We have the Fed talking about raising another 75 basis points yet again at the September meeting, and that's in a little over a week or so. There's a lot of different things they're going to happen relatively quickly. And we also have the ETH merge, which is a pretty big deal for the cryptocurrency asset class, whether you own ETH or not. I mean, it's a pretty big deal for crypto in general, the transition of Ethereum from proof of work to proof of stake. But regardless, I want people to remember that this indicator is here. And if we look at the log of the price over the 20-week moving average, we can actually see that this has been a fairly long period where we're below the bull market support band, and it is getting somewhat similar to what we've seen in prior bear markets. I mean, if you go look at this one over here, of course, it did last a little bit longer. For instance, if I were to take a date range from when really it first started, and I just sort of ignore some of the green bars in between where it sort of briefly popped its head above, you can see that bear market lasted about 59 weeks. This one, if you assume it starts right here, so far it's been going on for about 41 weeks or so. So could we still spend some time, many more weeks, a few more months or something, potentially below the 20-week SMA? Yeah, sure. Could easily happen. I just want people to remember that one day, right? One day in the future, and I said this early this year too, one day in the future, when it seems like there's, all hope is lost, we'll finally get back above it, and we should start another bull market, assuming we can then hold it as support. Whenever we get back above it, there's no reason to get too excited right away, okay? Because again, we know that we can spend a while in an accumulation phase. It doesn't necessarily have to break out immediately. It could last for a while, all right, in this sort of range. But I do want people to sort of recognize that Bitcoin is a lot more undervalued, I think, than it ever used to be. And we spent so long up here that it was very difficult to sort of get really great value on your buys. I mean, also the risk levels for Bitcoin were a lot higher, but they stayed high for so long. It sort of makes you wonder, like, how long can can it stay that elevated? Now that we finally come back down, we've had our date with destiny. In fact, we're below the 200-week SMA right now. The 300-week isn't even that much further down. And in fact, it actually is now at the bottom that we already hit. I mean, if you look at the 300-week SMA, it's coming in at 17.5K, which is basically where we already went to. So if we did go see the 300-week SMA, at this point, it wouldn't even necessarily be putting in a lower low. It could just be retesting the prior low. So these are all certainly important things to consider. I look at the chart and I'm constantly trying to figure out, where are we in terms of the market cycle. And I think if you measure the peak from April, you have a more compelling case that the bear market is over. If you measure it from November, then I think that case is less compelling, because it just sort of as like a function of time. We haven't had that full year. If you measure it from April, we have, right? So I mean, it really depends on what sort of camp you're in, what you think makes the most sense. If you look at this prior bear market over here, actually, why don't I just pull it up? Let me just pull it up over here. If you look at this prior bear market after the ROI after cycle peak, it's still sort of following this impulsive move that we had back in 2014. If I sort of zoom in right here, so there's a lot of reasons, I think, to look at Bitcoin and to try to figure out, is it in a phase that is more like this, where we go into a low and then we put in a higher low, and then we slowly march our way up to the 20-week SMA and then break out, right? You can see the comparison here. Or is it more similar to this phase, where after finding a 60 to 70% correction, which is where we are, right? I mean, again, I can overlay it. I mean, I just showed it to you on the other chart, but if you want to see what it looks like, if I can sort of just match this up, if you just want to see what it looks like, I mean, we're sort of in that same range of being about 60 to 70% down from the all-time high. And really the question ultimately is do we get a final shakeout, right, on Bitcoin? And what's interesting is we are seeing the dominance of Bitcoin tick up just a little bit, which is also something we saw at around that time over there. So, I look at this and I'm optimistic for the future for Bitcoin. I'm also cautious in the short term. Not really sure if we're going to break above it or not. But I do know that, my strategy doesn't really change either way. Okay. I mean, over the macro scale, Bitcoin at around 20K it's much better value than it was at 60K, that's for sure. Unfortunately, there's a lot fewer people interested in it at 20K than there was at 60K. But my guess is it's going to take quite a while for this to really unwind and for us to really see a sustained bull market, even if the bottom is in on Bitcoin in more of a macro sense. I still would argue that we have quite an accumulation phase ahead of us to support a strong, sustained rally to new highs. I mean, history shows us that time and time again, that the bear market then goes into the accumulation phase, and then the accumulation phase then goes into the bull market. And we're still trying to figure out if the bear market is over, right? If this is the low or not. We're still trying to figure out that. And there's certainly no guarantees here. I feel like there's a lot of polarizing views, honestly. I mean, a lot of people are adamant that the bottom's in. A lot of people are adamant that the bottom's not in. At the end of the day, no one knows, is the truth, right? No one knows. Some of these people will be correct. I still do remain relatively cautious. I don't want us to get ahead of ourselves, especially because we know Bitcoin could have another leg down. But is it worth risking not having any Bitcoin waiting for that? I think that's ultimately up for you to decide. But the 20-week SMA, again, it's about 24K, just over 24K. So I do think that's an important line in the sand to watch for Bitcoin. We are seeing some type of, some positive price movements this week and over the last couple of weeks. We'll see if we can get back up to that level. And if it does, and it even goes and puts in a higher high from before, keep in mind the 21-week EMA is sitting just below $26,000. So a lot of resistance overhead. And then finally, we also have the 200-day, which is sitting a bit higher at 30K. Wouldn't that be crazy if Bitcoin went back to 30K? If you look back at the prior bear market, we hit the 200-day, a couple times before we finally like bottomed out over here. We didn't even get to it right here. And you can see we've really hit it once so far this bear market. If we got to the 200-day, I'm not very optimistic about us getting much above 30K, honestly, like at this phase with how the macro looks and all that. I will say, never discount any possibility. I still remember back in 2019, I didn't expect a 14K Bitcoin last summer. That's for sure. And I remember like, seeing this occur, and it was sort of like it's somewhat like, disbelief. Like, are we really only at 14, or we're already at 14K? Wait, the all-time high was at 20K, and I believe the highest monthly close back then was at 14K. And it was weird because it's like, okay, we're literally back at the same price that the highest monthly close for Bitcoin ever was, and it's only 2019. So there's some things to think about with regards to that, in terms of just always admitting to ourselves that it's impossible to know exactly what will happen. It's important to sort of plan for different strategies and to think about how do you hedge yourself under multiple scenarios. We try to talk about that some on this channel, and we talk about portfolio construction. I just put out a video on that the other day, and how you manage your risk with a lot of other cryptocurrencies. And I know I haven't really spoken a lot about altcoins this year, and it's been frustrating for a lot of people. But the reason, if you go back to early this year, I just simply said, altcoins are risky this year, really risky, and I'm not really sure they're worth the risk. That was what I thought back then, and I still maintain that it is a relatively risky play at this point. And I just want to make sure that, I'm trying to be patient on that. We will talk about altcoins again, in the coming months. But I don't want to overdo it at this phase of the cycle, when I think it's more important that people do remain cautious and protect their assets as best they can, rather than chasing the most recent mania or FOMO or anything like that. So let's see what happens over the next few weeks, if we can get back up to the 20-week SMA. I still do remain relatively cautious again at this point, because we do know that bear markets can go down 80%. We've seen it happen 3 times before. It could happen a 4th time. Don't think it can. Don't say that it can't just because it's what your bias tells you. I think it could, but I'm hedged either way. And if it doesn't, then 20-week SMA is not that far away. And at this point, if we were to break above it, I imagine we'd enter some type of longer accumulation phase, where we might flirt with it for a while. And even if we get back above it, we usually don't hold it as support on the first attempt. If you go back and look at prior accumulation phases, right? This one got rejected, this one got above it, but we failed to hold it as support, and then we held it as support, right? So it can take a while. It's a long process. Just sort of look at the market like that. I think, like, recognize that this process takes a long time generally to play out. It doesn't play out in a day, it doesn't play out in a week, it doesn't play out in a month, right? It can take 6 to 12 months to play out, to see that market structure that you really want to see to support a future bull market. And I also think too that my cautious stance can somewhat get misrepresented. But I think to some degree we're often just a product of our experiences, and I've experienced multiple bear markets by Bitcoin, and I've been let down so many times, that I think it's always good to maintain a healthy level of caution in crypto, just because we know how easy it is for these things to get rejected and for us to just go put in lower lows. So let's see what happens with Bitcoin. It's currently at 22K. Remember to check out the newsletter, the ITC newsletter, down in the description below. And every month we'll pick someone at random, and that person again will get a free month subscription into the Cryptoverse. It comes with the whole website. We have thousands, I believe, of charts now. We've been spending the entire bear market building it. We have on-chain charts, derivative charts, price metric charts, not only for crypto. We also have a lot of things for stocks and Forex and commodities, indices, a lot of different things. And we'll continue to build that. So check it out, intothecryptoverse.com. Check out the newsletter, linked in the description below and the pinned comment. and we'll see what Bitcoin can do over the next few weeks as it approaches the bear market resistance band. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and we'll see you next time. Bye.